Hey guys, good afternoon. Good afternoon. So we had a good trade session today. Really sat on the gap line like we thought it would. Got up to the daily one RVol and sort of held here until that announcement came out that the tariff deal with India has been completed, and it had this great, 1 hour candle. And we just stalled out at the dealer break even that we sent you the report out this morning that was skew adjusted. So that means that if it had broken higher, the dealer would be participating delta hedging. And I think that we all have in the back of our mind how far they are away from their max pain as it is. So they had already delta hedged this call position, and the upside call skew adjusted was their second hedge. So the first hedge was on the daily one, and then they did the second hedge. So for the skew adjustment, and we got that both of them right. Look at that. So we knocked it out of the park today. So I think I've gotten everything down correctly um, with the algo. Worked hard to get it to this point, and I am liking the report now. Got the report back to where it makes sense again, and had gotten off track a couple of days there, so my apologies for that. There was um, change that I made to get it refocused back, and focusing in on the things that are important for me to look at. So it makes sense to me. If you have any comments or suggestions on that, let me know. But the data is again working pretty well for us, so I'm very happy with it. So going forward, what does this mean? The market sold off on these tariffs, and we have now broken the gap line to close that April 2nd gap. So if we go back up to April 2nd, right here, we're now inside the gap. We're right up here. So we want to get up to we got on top of this big bear bar right here, but we want to I need the daily bar to look at the daily bar instead of the 60-minute. So you want to get up to the daily open. Let's put up a real quick chart and take a look at that. I think it's 57.10, 57.11, something like that. For some reason, I cannot get this to give me a black background when I open this up. I don't know what I'm doing wrong. All right, so the open is at 56.72, and the close is at 57.12. So it's 57.12. It's on the close. 57.12. That's where we want to go. Right there. Yep, on the close. Because that's where the gap started. We closed here and then gapped all the way down. So so very good. We're in the path now. At least we've broken the gap line. So this open was at 55.50.50, and you can see that's where we sort of gotten held up. Today, we hit our daily one on top of it and held. So we're in the path to close this. Now, this move right here to get us back up here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12, 13 days to go this length of distance is kind of remarkable. Usually it would take months to recover something like that. And the speed at which it recovered, namely because of the realization the market just overreacted tremendously, and it does need to fill this gap, um, was just an extreme overreaction. Um, and we had, like I said, Europe selling the market that day, which was crazy. We have our allies selling our market out. Makes no sense at all since they have, their pension funds and their 401(k)s tied to the market. It's like, I don't know what that was about. Um, but I guess people figured out that they were making a huge mistake, and fortunately, they're correcting it. There was no reason to sell it off like that. So just huge overreaction. So we're getting it back, and that, whether it's the fastest or not, somebody was telling me about 2008. Steve Sosnick was mentioning that that was um, faster, but 2022 he did mention, and it took a long time in 2022 to come back. Let's take a look at 2022. We had a huge sell-off, but it took a long time to get it all the way back. It just takes months and months and months to reach, back to where that sell-off starts from. And that's when I was trying to make my point that we've recovered faster than it usually takes. Usually it takes a long time. And this is pretty vertical. Look, it's pretty much, we had the one mini pullback, but it's going straight up like a rocket. So once we hit that gap line, we can expect some more consolidation, but at least we're getting up there. Now there is some, resistance inside here that I'll talk about in tomorrow's report, but overall, I think we're on the right path. So, but very happy that we're getting the calcs right. That's the most important thing. And we're on our path, I think, to having a successful algo with this. So thank you so much. If y'all have any questions, let me know. And we'll, just keep your eye on this one inside the 14 or outside. That's another big tell. You can't really get a market breakout inside the range, and especially when you run into break evens and things like that when the dealer's so far outside of its comfort level. They don't want to spend a lot more money. They're already probably hedged on that long put as it is, and to have to hedge again twice or three times is costly. And I've already mentioned this to you. They're not in the business of losing money, so you have to follow the dealer flow for successful trading. Yep. All right. Keep it on the right side with the dealer, and we'll do well. With that said, I hope y'all have a great